Welcome to Tuesday's Market. SITREP. Whiz here, the primary and weekly options model portfolio manager here at TGO. And it looks like we're going to see a little bit of a relief rally today from our market's essentially petulant child reaction to the Fed's announcement last week that they were kind of maybe sort of thinking about ending quantitative easing yesterday. Dallas Fed President Fisher, I believe he's over there in London, walking back the comments of the Fed from last week. So we're starting to see the Fed president scramble out to a microphone because of the absolute drubbing that not only U.S. equity markets, but markets around the world are taking as a result of the Fed's preemptive action or shot across the market's bow. European stocks are plunging. The China market China's got its own issues. They are the United States 2008 right now. They have a huge housing bubble. They have a credit crunch. They have a whole cauldron of activity going on. Although the PBOC, People's Bank of China came out and said, hey, we're going to, we got a whole, boatload of quantitative easing as well, or, monetary stimulus that we can throw at the market. So a little bit of a stabilization out of in Japan and also on the Shanghai, but still we're walking around on tender hooks here. Saw some relatively good news this morning as far as durable goods and core durable goods, obviously ex transportation items, usually i.e. Boeing. So relatively green. So this week we're really going to see, as I viewed or laid out in yesterday's Monday Market Outlook over at Wealth Creation Investing, if good news is going to be good news this week and bad news is going to be bad news. Are we seeing the end of Bizarro market? Meaning in Bizarro market, when the Fed was propping it up, good news was good news and bad news was good news. Are we going to see this week if bad news is in fact bad news? I'm starting to think so. I'm starting to feel that the market is slowly turning from Bizarro market and trying to get back to the market that it used to be that didn't have a Fed put underneath it. Now, I don't think really the Fed folks walking back what the Bernanke said last week is necessarily a good idea, because now we're going to get into these confusing signals again, and the market's going to stay really, really volatile. I don't think just because the market's going to be up today that this somebody rang the all clear and everybody can run back into the stock market. Absolutely not. Put on a couple hedges yesterday, a bullish double vertical on SDS, Sierra Delta Sierra, in one of my model portfolios, and also some hedges with volatility as well. So it's certainly not the all clear, and I got to tell you, as we get ready for Q2 earnings season, it's not looking good. 70% of the companies that have pre-reported are to the downside. So 7-to-1 negative to positive ratio of earnings being pre-reported. So I don't think Q2 earnings season is going to be good. I think people are still freaked about the Fed. So it's going to be a very volatile summer. I love it, though. Obviously, as an options trader, I love volatility, and the more volatile, the better. But if you're just a regular old equities trader or investor, you're probably going to have a rough go of it this summer. But slow and steady wins the race, right? I mean, markets go up over time. The Fed will eventually get out of this thing, and hopefully not with an absolute train wreck, and the sun also rises, right? But for the short term, we're going to see a lot of volatility, especially since the macroeconomic data aren't doing that well. Housing just isn't doing that well. We'll get some Case Shiller and NAHB housing info today, but all in all, just a very soft go of it in our economy, and I think that's why the market's freaking out as well, is we know that the economy is not doing that well, and the Fed's deciding to exit. So I think they're deciding to exit for not economic reasons, but for, hey, we really need to knock this stuff off reasons, which is, when I laid it out last week, the good, the bad, and the ugly, with what the Fed could potentially do, that was the ugly scenario. which is not good. Okay, so stand by for more volatility. Like I said, I love it here at Top Gun Options. If you're interested, I'll throw a live trading session open to the public on, let's call it Thursday afternoon let's do it after the market close, just to give you kind of a heads up on where I think we're going, and maybe some potential trades that I'll be looking at in the model portfolio to take advantage of this volatility throughout the summer and into the fall. Okay, happy hunting. Make sure you hedge, and I'll talk to you guys for tomorrow's SITREP. We'll see you.